Good afternoon, everybody, and welcome back to our StockTwits Q&A forum. I'm Brittany Umar. I'm going to be joined by Scott Red Dog Redler in just a few minutes. But before he joins us to answer your questions live, we're going to take a look at a quick video showing you just a sneak peek into Scott's trading world. So check this out.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50. Apple's good. You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island. Went to school at SUNY Albany. As a firm, we are 5 partners, and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade, and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon and happy Thursday. Welcome to Conversations with Red Dog and Brittany. So happy to have you here once again, and I'm glad that everyone's tuning back in and you've had a lot of success here with Laz as well, who's going to be actually making a guest appearance in the second segment of this show. So, don't worry, he'll be here shortly. I see a lot of requests for Laz, but you're going to have to just bear with me and Brittany for the time being. So, let's just not waste any time and just go right to the questions because I see them already all starting to pile up.
All right, well, we have a great first one from DBQ asking for your market view for June. What's your S&P target?
This time it's a little bit more difficult. A few different times you could have a thesis and then the market confirms it and you could have targets. And at some points during the year you could have a plan, but you really have to wait for the market to confirm it. So as we head into June, it's a little complicated. We all know that typically bottoms aren't made in June. Bottoms typically aren't made in July. There's a lot of summer that we have left here. So a lot of people are thinking, was 9% enough for this correction? Due to the fact that we have a lot of complicated headlines coming in. We're still getting them out of Spain. We probably have a few to go in Italy. We still could get a France downgrade. So there's a lot going on, especially also the US data seems to start slowing down. So we really have to watch levels. So what I want to do is I want to have a few different plans, wait for the market to confirm it, and then trade accordingly. But for everyone, it's a little bit different because we all have different time frames. If you take a quick look at the chart of the S&P, you will see it was pretty easy back in December when we were on CNBC and we said if we break above this 127 coming into the new year with new flows, we could see a nice move up to what our target was with about like 1,400, 1,440. So that was a nice trend. Remember, we followed the 10-day and the 20-day. This is actually the 8 and this is the 21. All the way till finally we started hitting the upper area. And if you remember, I think the first segment of the StockTwits we talked about switching gears after the first quarter. First quarter, you had big gains. We were able to hold 10 to 15 stocks, high five as they made new highs. Ed, take off, laugh, cry, the whole thing. And then coming into the second quarter, sometimes if you just do the right thing, you don't need to know what happens because you get pleasantly surprised. And then within the start of the second quarter is when things got choppy. We weren't expecting the first quarter type results, but we weren't sure if we would have the sell in May and go away, and that's what pretty much took place. So if you go back to the chart here, you will see that we start to see this head and shoulders pattern being built, the left shoulder, the head, the right shoulder. And then with that, it was a little bit easier to forecast because you remember, the distance from the head to the neckline, that's when right around here we were saying, I put a 75% chance we could hit, 1,300 on the S&P, which we wound up doing, which thanks to Alex Steele, she gave us a shout out on Bloomberg about. So now your question is, what do you see moving forward? So right now what I see is this. I see, a 9% move off the lows, and this was the first point of reference. There you go, 129.55. Then a few days later, we held higher at 129.99. And then today, we held at 130.34. So we have a predefined floor to trade against. And we also have a little bit of resistance. We came up and retested. So at this point, my gut tells me, and if it's like meaning if someone had to put a gun to my head and say, what do you want to do the next 3 weeks if you're not going to be trading every day and you had to be long or short, I would say I do think it's a higher probability that the lows don't hold. But we don't have to have a gun to head because we can make decisions as it goes. And I do think if we break that, the 1291 to 1295, or if you look back at this floor right here, which we held today, because a lot of people thought it would happen today, just to show you that it's not a very easy market. But if we trade and break this area, you do have the 200-day right there, 128.59. And I do think, I did speak with Alex today on Bloomberg, and I said that there is a chance that with everything that's going on right now, we could come back and retest this 125. I'm using the spiders because a lot of people trade it. So we'll see. And if you take a broader scope here and look at the weekly, this is all we've done since the since the 2009 lows or this October low. We've come in 9%, so we do have this room to go. You just have to figure out how you want to trade it and what plays to your strengths.
All right, well, here's a great strategy question just as a follow-up to that point. Dieter Trader says, well, thanks for sharing the price point sheet the last 2 days. Can you go over how you game plan tactics in stocks like Amazon, Apple, Google, GLD?
Well, the price point sheet that we have it's a tactical sheet for guys that trade every day. You can get it on the site. You can look on the front page. What we do is we put support, resistance, and action areas. And these action areas are pivot points. What you have to do is you have to take these price points and wait to see how the market acts and how the stock acts at those price point sheets or those price points. So we do it every day. We do it in the morning so we can upload it to the site so it could be as real time as possible. If you look here and just say Apple, you'll see that we talked about this a few different times. Last week we talked about a time frame, your swing trade. Obviously we put in the post the few different sell signals when the 620 sell signal, the not holding the earnings gap sell signal, and then holding the 100-day constructive buy signal, especially when it cleared this. So this right here was my pivot point. This was a 543. So if you were short Apple saying, oh my goodness, I think it's going to go down to 466 and it started to break above this mini pivot, and after holding the 100-day, that seemed like a really good action area, and that's why that was listed as a pivot. And then, on the price point sheet, we talked about different levels of support. Tactics that we go over in our active trader course on why you could see strength and continuation, because look, from 520 to as high as almost 575, we held the top third, showing commitment to this move. We went sideways. So recently on the price point sheet, we had a 574 to 576.50, saying that if we clear this area and you were short, it could be another good tactical play. And P.S., it was a nice trade yesterday, it held today, and it could be on its way to its 50-day, which it's providing leadership. But then on the other side of the pendulum, you have Google, that's been weaker. You have Amazon, that's been weaker. And some people trade them on a macro basis or on a tactical basis. And off the charts, we've been showing the charts on a macro basis, showing how the direction has been down. But then on the price point sheet, which you've had the luxury of looking at, you've had the price points to actually act on. And some of them have been really good lately this week. If you look at Google, we talked about if Google broke the 200-day moving average, that you can get out of it, because on a macro level, that's not healthy. I don't care that it's Google. I don't care that I said it was my stock of the year in December. We trade real time and things change. So if you look here at Google, you will see that stock started to really change course. This was when we loved it, when it was tight. It actually had a nice move. Here was earnings. It got put in the penalty box, held the 200-day, rallied up, put a high in, a lower high. This was the last time it came out with earnings, didn't act well, another faulty signal. Then it tried to break out as we came into Facebook, another faulty breakout. So tactically, we said if it breaks the 200-day, you got to get out of the way, and that was 596. So 596 was a level that if you were looking longer term, I would say sell some. You could always get back in. So on the price point sheet, I think today we had 588, okay, which the reason why is this was yesterday's low, right? 588. Here's another area. This was about 590. So tactically, if it were to break this area and you were long it, what would you do? You'd probably be scared, so you would hit it out. You're looking for a continuation entry. It's going to have to get above that area. So if you look here, on 580, there was a nice price. And then today, it was weak. Amazon reversed, Apple was okay. Google still weak. So the next point of reference, which you'll probably be seeing on the price point sheet, is right here, this support level, which if you look at this nice little trusty Quotron, comes in right around 564.55. So I do think if you're short this thing, you could probably put a stop in around 596, and I think at some particular point, we're going to at least retest this lower area, this point of reference, which comes in around 564.50. And I guess lastly, since we're on this topic, Amazon was a little bit different. And in the corrective phase, it's been so sector and stock specific where a lot of people saw Amazon reverse. People saw Amazon reverse, so they said, Google has to reverse. Lately, just stick where the action is. The action is so contained and the volume is so lethargic that if something happens, typically you used to be able to go after another stock in that group, but lately they're all trading on their own island. And today, after 2 or 3 nice tactical shorts in Amazon, it finally gave a red dog type reversal where you could have made money short and long. So if you look here on Amazon, this was the pivot point, right here, where you remember when Einhorn came out and said he doesn't understand the business model and this wide range bar engulfed this area. That's when it became a short. That's when a lot of momentum left. And then especially when it broke below this 220 area. And on the price point sheet we talked about, once it breaks this 220, the earnings gap momentum where shorts are trapped, it could change. So you had a nice 2-day short, and then it had to figure out, was that enough? So it went sideways, 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 and then yesterday we listed 212.29 as a nice little short tactic, so another cash flow short. But then what did we do? We came into an important moving average. Today, it crossed below 207.75. It only made a minor low of 207.11, so only 60 cents, and then reversed. So a lot of guys who said, I'm going to look for some type of bounce and saw the relative strength in the morning, caught a nice trade, but at this point, that's all it might have been because we're going to be coming against a pretty big downtrend here. So tactically, the price point sheet's there for professional traders and people who could actually be in front of the keyboard all day long to hit the keys. And really for the price point sheet, you can't just use the price points and the tactics. You have to learn them in our courses. A lot of people are like, why did you put that action area there? You're not going to learn and have conviction to go with unless you really look at and understand why we do it. And that's why we educate everyone out there on our tactics. So the price point sheet is a supplement with tactical plays, but you have to understand those tactical plays before you can start pushing those keys.
And how did your tactics compare with GLD? Because that was one other one that Dieter Trader asked about.
Well, GLD, we've talked about major levels, which is a whole nother thesis. Gold has been trying to hold 148.5. Why is that a major level? Because it held back in December, and then it held again recently, putting in a small little double bottom. And a lot of guys yesterday started to cheat a little bit thinking it was going to break, so they got short before it actually broke, which I've done many times and I've lost money trying it. You try and get a head start and that head start could slap you in the face. PS, GLD right now is desperately trying to hold this area. And if you look here, you can see why. This was the low back in December, and then this was the low that was just put in recently. And since then, it's still holding. It's still going sideways. So at this particular point, this is what you should be trading against. But what also is going on is a small descending trend line here that people were able to short it. Like the same thing actually happened here. If you guys remember, this was Fed Day. This is when this potent wide range bar engulfed this whole section and created a lot more downward pressure. And then every time you came up, you could have shorted here, shorted here, shorted here, shorted there. Then finally, the pennant broke to the downside. Well, now it's building another lower pennant where this time it might be able to break this downtrend and squeeze up, but it doesn't feel like that's going to be the case, but let the market confirm it. So I would say on the price point sheet, you'll probably see 153 to 155 as a buyable area, but if it doesn't get above there, it's still in a downtrend, and once this breaks, you probably have to go to the monthly chart and look, and you'll see that there's a lot of air underneath this, and if it does break this double bottom, or what people are perceiving as a double bottom, which is 148.53, next real level here is 140. So a lot to consider, a lot of plans, and just wait for the market to confirm it and then jump on.
All right, well, let's talk Facebook because we are getting questions on that, and you did mention it briefly before. Dr. Michael and V. Devara both complimented you, said great call on Facebook. How much upside is left?
You know, there's no reason to guess. You let the market tell you. Let the stock, sometimes you can get in correctly and you could be positively surprised because you could trail it, and as long as the trade doesn't change, you could stay with it. And you know, a lot of people were asking me a week ago, a lot of my friends, the mailman, my cousin, the sister, everyone says, when can I buy Facebook? And really I didn't know. It just sounded good in my head. I'm like, you know, between 26, 28 probably sounds cheap. You know, but from 38 or 42 it makes sense. And what I've been waiting to do is waiting for the market to give you that first green light, which we all know is a reversal pattern. And if you look here on Facebook, first, this was obviously the first day, came in, nice bear flag. We talked about this pivot point, which was 30.94, became a nice short, right? Here's your bear flag, here's your pull, here's your flag, continuation. And then as it gets lower, it's harder for that to happen. So that's why each day I've listed different pivot points. This one was 28.65. This morning, if you look at the price point sheet, 27.86 was the pivot. So if you said, okay, let me combine both worlds. Red Dog said that below 28 to 26 is probably a good spot, which I didn't just come up with out of plain air. That was actually where it was supposed to be priced before the investment bankers started to get a little piggy, and all the investors wanted higher valuations so they can get paid. But that's a whole nother song and dance. So anyway, that's why we looked at that area, and then we wanted to see if the market could confirm it. So if you look here, you will see that it traded below this 27.86 and went as low as 26.83. Okay, so you had about a $1 risk reward. So once it recrossed above 27.86, that was your buy strategy. Okay, that was, okay, I'm gonna buy this pivot and I'm gonna give it to the low of the day as a stop and look for a reversal. If you did that, unbelievable day trade. Now the question is this, okay, people want to understand why the tactic works. I'm just gonna go over it briefly because we do it in our active trader course on why this works. Because if you think about it, people have been saying Facebook now can go to 17. And a lot of people have made money shorting it from 42, 38, 34, recently at 30.94. And shorting it below the previous day's low has worked. And if you bought it versus that low, if you were prudent, you said, you know what, maybe it can go to 17. I'm going to get out if it breaks that low. So you have people who want to short it through the low. People get stopped out when it breaks that low. But there's some point when all of a sudden the shorts that have been going back to the well get squeezed, and people who get stopped out because they've been holding it too long and they can't hold it anymore, and then it reverses, and that's why it's such a great action area. And if you look here again, that's what happened. People who are just say maybe long it from here said I can't take it anymore. They got stopped out at 27.86. Those who started to press this low, like where it worked here, where it worked here, where it worked here, went back to the well one too many times, and then it changed. And if you look real quickly at the 5-minute chart, it actually was a really calculated, I won't say easy because it's always easier than you would think, but if you look here, there was really not much pain. Here's this lower level, here's this little downtrend. If you look when it broke here, this is when it woke up, okay, a bit of an igniting bar. If you want to go to a 5-minute chart, you'll see it a lot differently. So boom, igniting bar went sideways. So if you missed that and said, okay, oh, look at this, Facebook just woke up. This is my first entry. We could probably even use a tier system here. I could explain that too. So I wouldn't say there was any reason to be in it unless you're a bottom feeder until this happened. Broke above this minute, this mini downtrend, the hourly downtrend, right time of day around 2 o'clock. And then here is where you said, okay, I'm gonna get in tier one. Tier one, it wound up going. Here's where it crossed above that previous low. That's what we talked about. Okay, and then what happened here? It paused around 28. What did it do? Did it pull in? Did people say, oh, you know what, it's going back down? No, it stayed up there. There was commitment. You had to move from 27 to almost 28, and it held the top third of this. So this is where, again, what you could have done is you could have went from tier 1 to tier 2, or sold it here, went back into tier 1, and then once it crossed this little area, this is how you get to tier 2. You're in tier 1 as it incubates, as it flags, because now this has created a bull flag, right? Here's your pull, here's your flag, holding higher, showing commitment. Here's your add above 28. And then you had a quick move to 28.50, right? So right there into this move, you probably could have sold the tier and went back to tier 1. So now you bought tier 1, tier 2, sold the tier, booked it, and you stayed with it. And then what did it do again? Right here, it held sideways. and you could have went back in tier 1 and then once it crossed above 28.50 back into tier 2. And then it just stutter stepped all the way into the close. So PS, you could have made money using a tier system, booking it here, booking it here, booking it here. And then if you held your tier 1 the entire time from that red dog reversal price, which was right here at the low of 27.86, you then just caught a $1.40 move and you booked trades along the way. So on a longer term basis, people should be long versus today's low. That's a strategy, and sometimes you have no idea where it can go. That could have been the bottom. You could have just caught the bottom with $1 risk on Facebook, or you just caught a nice actionable trade that typically lasts a day and a half, but you have to see where it leads to. And lastly, I know I'm talking a lot, you go back to this chart, the pivot that I would put in tomorrow's price point sheet, think in your head, where would Red Dog put a pivot here? Red Dog would put a pivot right here, right? This is your 2-day high. Once it clears this 2-day high, if you're short it, you say, oh my goodness, I got to cover. Or if you say, I think this thing's going back to 30 to 31, it's obviously has to get through this 2-day pivot of 29.63 before it could do so. So this would be a short-term price point for continuation into what would be on my price point sheet, probably listed resistance at around 31.59. And then again, right around here, right below 34. So I think this would be move 1, move 2, but obviously it's got to get through here for that to take place.
All right, Red Dog, good stuff. All you Laz fans, we're going to be joined by the man in just a second, so keep the questions coming. We're going to take a quick commercial break. Be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
All right, we're back, joined by Laz and Red Dog this time. We got a first question for Laz about trading strategy. So, Laz, can you just tell us what indicators do you follow for market direction? Which ones do you find are the best? That question comes from Inwood.
Great question. Simple answer. The simple answer is price. I'm a price technician. There's millions of indicators, oscillators, moving averages. There's millions of things you can look at. If you went to Barnes & Noble and picked up the Technical Analysis Encyclopedia, it's probably about 1,000 pages, and it will teach you a lot of information, but where we make our money is the movement of price. Price goes up, price goes down. That is the area where Scott and I and all professional traders live, so it is my primary indicator, my primary driver, and it's what I pay attention to closely. Beyond price, I use other things that are all about price, like moving averages, EMAs, different types of EMAs. But really, to answer the question in its purest form, I'm a price person. That's what matters most to me.
Now, how does your strategy differ from that?
Well, a lot of technicians use so many different indicators, and typically one indicator counteracts another indicator, and it all depends where we are in the market. when we're in a huge down move, okay, and we're going lower and we're like 5, 6, 7 days down, then we'll turn to the oscillator and say, where is it? You've seen me tweet about it about a week and a half ago. The oscillator was like -80. So it was a useful tool then that, you know what, we're oversold. Don't be short here. Look at levels, look at price, and then figure out, you know, if you could play a bounce. And it worked. Same thing you could do. You could use a put call ratio. You could use your RSI. Everyone uses different. But really, for me also, I try and simplify it. I call myself a cocktail napkin technician. And what I like to do is I like to use chart patterns with price, with reference points. Then I look intraday for relative strength or relative weakness. And you can even dummy it down again, where if you're trading a stock and the stock's been weak, futures go up, and you know the stock doesn't go up, Laz, what would you think to yourself the stock is doing? Is it strong or weak?
It's weak. It's going to go down.
Exactly. So right there, futures go up, stock doesn't go up. Simplified, you could probably short it, and if there's a price point sheet there or a price point, you could short more. If the futures come in like we saw today, where the spiders were making new lows, and Amazon stopped going down, and JP Morgan actually stopped going down, and Apple looked okay, you know, what typically would you be thinking in your head? Do these stocks, you know, show weakness or some relative strength?
Relative strength.
Relative strength. So right there, you buy a little bit, and then if you can combine that with a price point, then you buy a lot because it's calculated. So there's a lot of different ways to simplify it. It all depends on what time frame you trade, and I typically like to put my morning game plan together based on daily charts, and then as the day unravels, I use a 3-minute, a 5-minute, and a 15-minute to show what it's doing intraday, so I could, you know, scale in and scale out.
Are you testing me?
Questions coming from all sides, Laz. Got to be on your toes.
I think I passed.
All right.
Get a gold star.
Yes, all around. Here's another good one for you guys to face off against. Level 2 says, at what point does a macro bullish correction become a true bear flag with downside potential and then a macro bear market? So Laz, you want to take it first?
Read the question again. That's a lot of questions.
At what point does a macro bullish correction become a true bear flag with downside potential and then a macro bear market?
Okay, so the question is, when is a correction not a correction? When is a correction a bear market? I think that's really the underlying question there. And I think the best way to answer it, again, is going back to what we said earlier about price. You know, when I look at price, it's not just about, you know, a red bar or a green bar or an up day or a down day. It's really about what is price saying overall. If we're talking about macro, we're going to look at higher time frames. We're going to look at weekly charts. So if we look at the S&Ps on a weekly, the one thing that jumps off the screen, and even on a monthly, is, again, trend. What defines a bear market or a bull market are trends. So if I remove the candlesticks, what I would say about trends, to me, the way I look at it is, when my averages, which is a very good visual representation of the movement of price, when my 8, which is my blue, and my 21 here in my red, are railroad tracking, ascending or descending. That's really been cyclically how we've defined bull and bear market cycles. So when I look at right here, right now, we are still in a macro bullish cycle. We still have an uptrend in place. If we go down a time frame, the weekly chart again, things are starting to change ever so slightly. My 8 is now pinching my 21. There is an underlying crack that could lead to a larger downside move, but only right now. Time is your friend as a trader. You have to be patient. You have to let these things evolve. So, you know, I don't spend a whole lot of time talking about corrections, bull markets or bear markets. I let the market simply just tell me this is what it is as defined by a picture on a screen. I think when you get beyond that, it becomes a much harder thing. And again, the objective trader, like Scott, you know, and some of the other traders here at T3 Live, are the ones that they're flexible. When a correction's not a correction, it's a bear market, you're going to know it. Price is going to tell you.
And the funny thing is, by the time the TV says, oh, we're in a bear market, that means we just sold off about 20%, and then typically maybe you go down a few more percent, and that's where you rally from. So it all depends on how you approach it. And what you want to do is you want to be out of stocks as soon as all the distribution days start lining up, where you want to lighten up, because that short term is telling you that the pressure is on to the downside. So if we go back to this chart real quickly, you know, obviously we'll go a little bit shorter term. We do follow what IBD says. I love a lot of their technicians. And short term, you know, you don't have to be looking at monthly and weekly and yearly charts to know that right here, after all these choppy distribution days, this is when IBD put us in a market correction, because short term, you know, the composure changed. Two things happened here. Obviously, you know, first, this uptrend that we had intact broke, right? This uptrend broke right here that we were riding all the way from October. Then you had a reflex move to retest. What did it do? It failed, and then we broke lower. So right there, even if you're a macro investor, you could have lined up, and if you were an intermediate trader, that's when you start leaning short. And until we get a new reversal type pattern, you stay with the short side. You sell rallies, you look for breakdowns. You don't really look for strong stocks because you're not supposed to. So, on that your last question, you said, when does a bear flag give you a correct, a bear market? Well, here's your flag. We're holding the bottom third. We're right near this situation. So in order to get in motion, we will have to break this 1300 or 1291. And then what do you want to do? You want to start looking at points of reference. And remember the last time we broke out right here? That was right around this 1255. And that's why I came up with this spot as a point of reference. All you could do is have point of references. You can use Fibonacci numbers. You can use moving averages. You just put your system in place that works for you. And for me, it's really intermediate type of momentum because that's what we like to stay with. But if you're a macro investor, the first chart that Laz put up showed you no signs that you should be out of the stocks that you'll never rebuy back. Because if you go one more time, I have diarrhea of the mouth right now, go back to the monthly chart because you want to talk about a different trend that looks very different. You still have here, okay, a series of higher lows, right? Here's your low, here's a higher low, here's a higher low. And right now, look how far up we are. So this could even come to here or so and still be, a low, higher low, higher low, higher low. That's why at this point, there's no need to be a hero because we don't know exactly where it's going to stop and where this trend is going to change, which happened here, right? And also happened, look how steep this was, here. So at this particular point, it's hard to tell whether or not we're going to correct 10%, which we did 9 already, 15, 20. So each level, we just kind of evaluate it as we go.
Would you like to say anything or no?
No, I think Scott makes a great point. I think, we spend so much time, people spend so much time arguing the bull-bear debate. And I think at the end of the day, we're traders. We have to objectively maneuver the markets, the ebbs and flows. When it's a bull market, our bigger picture charts will tell us. When it's a bear market, they'll tell us that too. And until it's, until something changes, we have to stay with what is and be flexible. And I think Scott makes a great point.
And just say today, there was some analysts that came out today and put a price target that we're going to break 666. I personally think that's irresponsible. That's someone who wants to make a name for themselves. That's someone who says, okay, we're going to break the lows back from 2008. You know what? First, let's break 1291, and then let's break 12. But I'm saying, but then let's break 1255. So you could look at the areas, we could look how the stocks are acting, and we can make collective decisions. Then we don't have to put outlandish expectations out there. Some people love huge targets and they want to see if the person won and the target met. I think the hardest thing is to say a scenario, the market doesn't confirm it, admit you're wrong and get out of the way because that's how you save money. And that's why you have high level stops and low level stops because you're trying to figure out where price is going to join your thesis.
That's what makes a market.
All right, well, I think it'd be interesting to see how you'll tackle this question. And being, as we just discussed, go-to indicators, this is a good follow-up. Avant New York City says, I'm in 95% cash right now. When would be a good time to jump in? What's the indicator to watch?
Well, being in 95% cash, I think is good because we're in a corrective cycle. A lot of people say, you know what, park your money here, park your money there, buy the Aussie dollar, buy the yen. You know what, don't buy anything you don't understand. Okay, you don't need to look for yield. I'd rather you put it underneath your mattress and wait for the best acting stocks at the right time in a market rally. Okay, if you sold correctly and you're 95% cash, you're also never going to be perfect. That's why you use a tiering system. We talk about a tiering system in every single one of our educational courses because you don't have to be perfect. So if you put a calculated spot, like if we were to break 1291, you said, you know what? I'm going to draw some Fibonacci levels and I'm going to, maybe buy 1255 a little bit. I'm going to buy 1202. I'm not going to do too much too fast. And then I'm going to wait for the market to confirm it and it starts working for me. And then you add. So at this point, I think 95% cash is prudent. I would say maybe more like 70% cash versus 95%. And then once we see a better environment, more clarity, you start piecing it in. And once they start working, put together 6-7 stocks. I'm not a 30 stock portfolio guy. I think 6-7 stocks, the best leaders out there. And usually when you have a correction, you get to see the best acting stocks and those will be the futures of the next up move. So right now we'll be waiting to embrace it, not run away from it so we can know where to go to next. And hopefully, we'll have those for you in our go-to list.
All right, well, let's dive into some stocks, shall we? We have one from Market Picker saying, despite LinkedIn's snapback today above 96, do you still believe it's likely that it comes down and tests the 86, 87 level?
Is that to me?
That's to whoever would like to answer it.
Okay, I'm going to just go real quickly. LinkedIn right now is having a bit of problem because obviously of the Facebook noise. I personally think that LinkedIn is a lot different fundamentally. It's got like 1/10 of the valuation, but ever since Facebook came out, it sort of broke this uptrend. Okay, after earnings it acted faulty. We talked about having a high level stop right here, and now it's kind of grasping. It was trying to hold this gap from when Goldman Sachs upgraded it, and it's holding on by a thread. So at this point, I think you could be in small, but it's got a lot to prove right now as it's hovering above the 200-day. To me, it's an avoid when a market's in a corrective phase. Like some guys made money, short it, because on the price point sheet we had a short below 96.12, went down to 91, hit support, and then it was also a tactical buy. So right now, use it as a cash flow vehicle. If you want to be in tier 1, I don't recommend being in anything more than a tier 1 in a corrective phase. But there are some stocks that will outperform, and there'll be just a better time, I think, to own them.
All right, this says, hi, Scott and Laz. AO Trader saying, what are your thoughts on Toll and the home builders in general?
Okay, let's take a look at Toll here. I actually talked about the home builders in a morning call. I believe it was last week, so you can try and go back and find that. I can't remember which day. But the home builders, we're going to look at the IYR. I think it's a good indicator as ETF for real estate versus looking at a specific home builder itself. This to me has the makings of a little bit of a topping pattern. You have definitive support down here at 60. High 59, $60. Looks a little bit like a left shoulder, a little bit like a head, and the potential forming of a right shoulder. I think it's still very early in this to make that call. Obviously, the calm firm would be a break of support down here with volume rising. But it looks like this, and again, I said this is one sector you want to pay attention to last week. This does have the sort of the inklings of a reversal, and we saw it in you see it in the XHB here as well, and even in some of the other, like a REIT, like Simon Property Group, that clearly broke its uptrend, and now flirting with potentially a bear flag here. So with real estate, it's a very interesting play here, as we could be on the makings of a topping pattern or a reversal pattern. And when the IYR and some of the home building indices start to turn down and break support, Toll Brothers isn't going to be able to hold. It's had a nice run. If you look at the weekly and sort of go back, we've had a really, really big exponent, percentage-wise, we've about 100% move here off the lows at 14 in not too long of a time frame. This only goes back to about September of last month. So, in the whole scheme of things, it's not a very long time. Big move, could be setting up for, a drawdown, a pullback, which, like I said on the daily, would come in the form of some sort of, breakdown in IYR. And again, this isn't confirmed. Obviously, if the market continues to probe lower, these stocks are not, they're going to fall prey to that as well. So it's had a nice run, setting up here. Keep an eye on that 60 level in the IYR, and that'll be your clues for some of the home builders.
I would say also that it's the sector is acting strong. If that 9% move off the highs is the low, then this sector will be one to turn to because it's holding above all the moving averages. A lot of the indices are below their 150-day, below their 200-day, and just one quick look, XHB is still hovering well above the 200-day. And if you put the 100-day in, you go to your basic studies. I'll give you a little signal lesson here. Go to your moving average. Put also 100-day, because lately the best acting stocks during this correction have been acting well if they held their 100-day. So here it pushed through the 100-day, came back above it, held it again. So, we talk about high level stops and lower level stops on this group. If the correction gets a lot deeper than down 9%, you're going to see corrective action in this group. If that was the low, which I do think high probability it's not, then you better just make sure that you're committed to this thing if it breaks like 1943, because it already broke this steep ascending channel. So the question is now, can it stay above this really, really strong support?
All right, well, jumping to a different sector, Jason Donald asking, what do you think about Dell?
Are we in 1980? It was a great stock then. I think our CEO said he made a fortune on it when we were out in Vermont in camp. We talked about it. But at this point, Dell, if you take a look at it, sometimes there's spots to buy these mega caps. This one itself looks gross, to be honest. It's below all the moving averages. This earnings move just engulfed this entire channel. I guess some people would say you could bottom feed here. I think it's just an avoid. If this is, again, the early start, or if 9% off the highs isn't enough, we're going to break this 1233, and then this pivot low here is around $8. I think that they have exposure to Europe. I think they also have exposure to a pullback in public spending. You saw that in the earnings report. You also saw that in Cisco. So some of these mega caps, you have to be very, very careful because they are exposed to Europe, which is going to slow down and probably be slow for a while. And then, we haven't even touched on the U.S., where the U.S. itself is going to be going through some type of debt ceiling debate very soon. We're going to talk about our own cutbacks, our own state finances, and I think the only people that have them are offices with desktops. They don't have a successful handheld device or this or that, so I just think Dell's an avoid.
Agreed?
Oh, agreed. I that's a diatribe I certainly can't I can't repeat, but I think the point here in Dell is that this is not a sign of healthy. This is not a sign of healthy price action. When I see that, and you look at a weekly chart and you get sort of a macro picture here, and Scott, summed it up nice and pretty. This is not a place where money flow is. It's a place where money outflow is. There's just no reason to be here.
All right, Laz. Well, here's one for you. Leapfrog Enterprises just won't die. What do you think about this one? This one comes from a name really don't know how to pronounce. Gargazoo? Sorry if that's wrong.
That was good. Gargazoo.
Leapfrog. What's the symbol?
LF.
Oh. Not a symbol I look at too much, so I don't have a lot of familiarity with it. But the good thing about being a technician is that again we focus on price, and price is what drives. Weekly chart here, which is what I'm looking at, just sort of getting a macro, nice uptrend, nice sustained uptrend. Been in a nice 5-week consolidation pattern above a rising 8, above a rising 21. This is a good-looking chart. If I flip down to a daily, this is a stock that looks like it is in the potential for another breakout here through that. $10.50, $11 area. If we can see a breakout here and volume come up, this looks like there's no stopping it from, potentially going higher and even going a little higher on a monthly chart just to get a real big look. There is some issue, I would say, there is definitely a level of resistance it's going to have to contend with in this area. So I don't know if I jump right in. But again, depending on the walk of life you are as a trader, if you're a daily chart, shorter term trader, there could be a nice tradable move here through that 10.50 mark.
Yeah, and that would probably be a price point on the sheet. That would be an action area because you have a tight consolidation after a big move above all the moving averages showing relative strength. That would be considered an A play on your strategy sheet, something that should be on your watch list for potential. So you put it on the watch list to buy through there, and then you map out where it can go. You go from the daily chart to the weekly chart, and that's how you put a plan together.
All right, let's touch on retail. Herb asking what your thoughts are on Walmart. Broke the trend yesterday, he says, and still continued higher today. Do we see it move downwards in the coming weeks? You're laughing already.
All right, because I got to answer that question because I get a lot of tweets about it because in December I came out with 2 stocks. They asked me to say, you have to come out with your stock of the year. So 2 of them were my high beta stock of the year besides Apple, which is always near and dear to me. I said is Google, and the other one was Walmart. Last year was Home Depot. So last year Home Depot worked great. This year I'm like, what could I come up with? And I looked at Walmart. I'm like, wow. Walmart's been in a consolidation for a decade. For a decade, people have been taking pain. They haven't made a dime. So I said, you know what? Makes kind of sense. Walmart, right? Everyone's wants to save some money. You go there, they're expanding their business. You look at this monthly chart on Walmart. So basically the reason why this was my stock of the year wasn't because I was just doing channel checks and looking into Walmart. I was saying, look at the size of this channel here. And if it were to trade above this little area, above 56, I put a target that it can get to as high as 70. So look where we are now. So this is your monthly chart, looking really good, going sideways. A lot of institutions owning it here, a lot of share buyback. And then you look here, you also had a break above this and then a continuation move. So you go to your daily chart, which also could show you some other tactics. Here you go. Remember the gap up? We talk about having gaps that don't get filled, pro gaps that show you power. This didn't even think about even pausing there, so it was a nice breakout move above this 62. So, fast forward to today, I actually lost a lot of money in Walmart because I saw this little mini reversal yesterday, and I said to myself, you know what, I'm going to try a little bit. I'm going to short verse this high. The high here was 65.95. So that was my calculated risk, and as traders, that's all we could do is calculate our risk. After a big move from here, I thought at least it was a sell signal, maybe a decent short, and then I got stopped out today through 65.95. I actually thought I was going to use it as a lesson because it went as high as 66.66 before reversing. So at this point, I would say it's a little frothy. I'd be careful. But if you look here on this, 3-minute basis, this was where you had to get stopped out. It gapped up, went sideways. If you live and die by the sword, which I do, and I'm risk averse, this was a strategy. And if you did so, you saved yourself, a nice 65 cents. And then obviously, in the end of the day, it showed a little weakness and wound up rolling over. So sometimes I'm a day early, and I probably won't go back to it.
All right. Well, anybody watching this StockTwits forum like I am knows that Laz has some fans out there. Laz, you've got one from Dieter Trader, saying, "Good to see you on the Q&A tonight. Still loving your active trader mentor room. How'd you first get educated in trading?"
Does that mean I have a cult following?
Well,
I'm glad you're enjoying the active trader program. Scott and I put our blood, sweat, and tears into it, but that's a lot of question. I've been doing this for 14 years at this point. Scott and I, started right around the same time, and we are sort of a product of our environment to some degree. We school hard knocks with trading. I learned to do by doing. Lots of pain, made lots of mistakes, did lots of things wrong, did some things right, but
some things,
very few. but eventually, it's like a puzzle, and the pieces just started to, I started to see the pieces fit together. A little bit of this, and I learned a little bit of that, and a little bit of something else, and I created, and crafted my style, and I figured out a lot about myself as a person. What I was good at, what my strengths were, what my weaknesses were, how I interpreted the movement of price. And I focused on that, and I spent years just focusing and building and focusing and building, so I could essentially define what I did and teach others to do what I did and what I saw and how I thought, because I'm not a naturally gifted trader. I don't have, I'm not in the matrix. I can't see, beyond what's in front of me, and that's the world that I live in. So, I try and do the very best I can, with that. And I think tradable, I think trading is a very learnable skill. I think it's a very misunderstood business. Everybody thinks you have to be right in trading. You don't have to be right. You don't have to be wrong. You have to understand risk. And that's really the principle behind what Scott and I really do for a living. It's not about being right in Walmart or being wrong in this or being right in something else. It's about risk. And we sat down a while back and we put together our story. And it's an interesting question because, we have the book here, the Modern Trader. This is a book that Scott and I and my partners wrote. And it's that story. It's basically our trading journey story. It's from inception to where we are now. It's not a trading strategy book, but it's more about how we developed as traders, how we matured, how we adapted to market environments, bull markets, bear markets, what we did to survive, what we did to, hone our craft to be, the best that we can essentially be at what we do. And because we love the StockTwits community, and the last time we did this...
Before we get into that, I want to talk a little bit, too, about the book, because I am one of the co-authors. And what I want to tell you is that, I've went and we've all spoken at many different trading expos. We've talked at seminars, we've been to Vegas, we've been everywhere, and a lot of people are always there looking for the magic chart pattern, the magic software system, the magic something or other, the holy grail, where we wrote this book really to show you that it's really not one thing, it's a formula, and it's approach. It's approach that you've learned since you're 4 years old, from when your grandma and grandpa said, you must be disciplined, you must take accountability, you must know what you're good at, work on what you're bad at. All these things your parents told you to do are really things that you need to do as a trader. So in this book, we try and show you what, our trials, our tribulations, a little bit about how we got to where we are today. And it's an easy read. It's not really an X's and O's read, but it's psychological, and it just shows you, what it takes, and a lot of it's perseverance. It's a lot of mistakes, and if you learn from them the right way, you develop a system, an approach that works for you, because what we know is your approach is different than mine. Mine is different than Sperling. Everyone just has a whole different approach, but if you know it, you're good at it, and you accept it, and you grow with it, you can make a living in the stock market. And what were you going to say?
I was going to say, the last time we did StockTwits, you and I, we offered the Active Trader course at a discount because we've gotten so much back from this community. It's such a smart community, especially in the StockTwits area. I get tons of, tweets all day asking lots of questions, and really always, high-level questions, smart people. We're going to offer the book for free, for free. All we ask is that you pay shipping and handling. I think it's a $35 price. We're going to, give it to you for free. The shipping and handling is $7.95. If you go to T3 Live homepage and you click on premium products, right here on the right, premium
Who's
products.
that guy?
And you go to...
That's a great picture.
You click on the Modern Trader. The page will come up, buy now, and you put in the promo code right here in the promo code box, BK795. So BK795, you'll see, click apply, and the price will go from $34.95 down to $7.95, and that just covers shipping and handling. The other thing I want to mention, before
Quick, could you show me how to do that again?
it's premium products, Modern Trader, BK795 in the promo code. The other thing I want to mention, and this is something that I'm really excited about, and I know Scott is as well. We're going to launch our first ever Active Trader Summit. We are going to go to 3 different cities in the upcoming next 60 days.
My wife's very excited about that.
Boca Raton, Florida, Chicago, and New York City. If you go to the homepage, you'll be able to find the Active Trader Summit. Go to Education, click on Active Trader Summit, and it'll basically take you through what we're doing and what we're offering, and a chance to meet. It's really a networking event. You get to sit down, spend some time with me and Scott and some of the other T3 Live commentators.
Maybe we'll get Brittany to go.
And I can't tell you, we are very, very excited about the Active Trader Summit, because I think it's something that we can launch nationwide at some point in time, and I know there's been a big demand for it, so something we're all very excited about.
All right, take us home.
Aren't you guys happy that you watched today? And if you need that promo code, again, it is on the StockTwits forum. Thanks so much for watching. Hope we answered some questions for you today, helped you out, and come back and meet us here next week.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.